Hi guys, it's Thomas here from COTBase.com. Welcome to our tutorial videos. This is episode 2, COT Report and Data Types. So you might be wondering, oh my god, there's more than one report type, more than one data type. Which one should I choose? So the reason behind putting together this episode was to really help you understand the differences between these reports and possibly give you some hint on which one you should choose. So first of all, we will start off with the classic or legacy COT report. In the first episode, of course, I talked about the fact that COT reports are basically breaking down open interest into traders' categories. So the whole thing, it's about commitments of traders. So we want to understand what traders are doing. And in the classic report, we have two major categories, the reportables and the non-reportables. And reportables are basically large speculators and commercials. Non-reportables are, as the name suggests, traders who do not report towards CFTC. They're the small speculators. Now, the reason I have crude oil here is I would like you to remember this number. They are at 21,071 contracts net long in this report that we're looking at. And if we jump over to the disaggregated category and open crude oil, then you will find that commercials are at 21,071 contracts net long. Now, the reason I did this is I want you to understand that what CFTC has done back in 2009 when they introduced this disaggregated report type is they simply took the reportables category, large speculators and commercials, and went even deeper, breaking down traders into producer, merchant, swap dealers, managed money, and other reportables. Now, of course, you might be asking yourself, which one should I analyze? Which one's better? Now, I just mentioned to you that CFTC started the publication of disaggregated reports back in 2009, although I should mention that they gathered historical data back from 2006, as you can see on the chart over here. Of course, that's available to you if you're on COT Base. And so to understand which one to analyze, if you're the type of person who really wants to understand every little detail, who's the one trading, then you might want to look at these newer report types. But if you've read a book or an article about COT analysis, most probably when they were referring to COT data, they were talking about the classic or so-called legacy report type. It has the longest history. It dates back to the early 1980s. That might be the reason why these books are dealing with the legacy report type. Now, the next category or report type are the traders in financial futures markets. And you can see over here in the markets, we are talking about currency futures, stock indexes, interest rates, and cryptocurrencies. And of course, let's open a chart and you will see how these, how basically, again, we're talking about the reportable category divided into newer categories. Here you can see all of them: dealer, intermediary, asset manager, and so on. Now, I'm not going to detail who they are exactly. The reason is I want to keep this episode as simple as possible, straightforward. But if you are interested in who they are, then just visit cotbase.com. And on COT, we have a lot of information who these categories are exactly. You can find it over here. So the last type of report is the CIT, and the CIT basically stands for Commodity Index Traders. This is a supplement report on agricultural commodities showing how the index tracking investment funds are positioned in these futures. And you can see that basically we have the index traders in black over here. So that was the report types. Going on to the COT data types, we have three different categories. We have the futures only, futures and options only. Now, futures only, of course, is quite obvious. It gathers only information from futures contracts, but futures and options, it basically adds options information as well, simply converting options to futures contract equivalent by delta correction. Now at COT Base, what's really new and interesting is that we've come up with the options only data type as well by simply subtracting futures only data from the futures and options data, and then you get the options only. So this episode was about COT report and data types. Now you understand the settings here and you can decide which one you want to analyze. Thank you very much for your attention. I hope you enjoyed it, and I hope to see you in the next episode. Take care. Bye-bye.